Hey everybody, welcome back to the channel. It's Dr. Johnny Walker, aka Jonathan Withanacci. And I want to tell you about a really awesome email this week that got me super excited. And I thought it would make a great teaching moment. And so I made this video. Hey fellow wealth builders, please pardon the interruption. But before we jump into today's informative video, I want to personally invite you to the Passive Investing for Dentists Summit happening February 5th and 6th in charming Charleston, South Carolina. This is not your typical dental conference. We're bringing together a highly curated group of a maximum of just 50 dentists and practice owners who want to build passive income, reduce their dependence on clinical dentistry, and create more freedom in their lives. You'll be learning from nationally recognized investors, including Joe Fairless and Rob Beardsley, while connecting with other high-level dentists who are serious about building wealth beyond the dental chair. Registration is now open. Visit passiveinvestingdentists.com to reserve your seat, or click on the link in the description below. Again, we're limited to just 50 dentists. Once it's booked and sold out, it's sold out. So please go get your ticket now, and I'll see you in charming Charleston. Now, let's get back to the video. Now, back in late 2021, I invested $100,000 into a 27-unit value-add apartment building in northern New Jersey. Now, it's important to note, this wasn't my property. I didn't find it. I didn't get financing on it. I wasn't the sponsor. I wasn't the one responsible for the day-to-day operations. I was not managing the renovation, and I was definitely not responsible for managing tenants. I invested in this deal as a limited partner in a real estate syndication because I believed in the sponsor who was running the deal, and I believed in the business plan for this property. It was a well-located asset near major nodes of transportation, and the rents at present were well below what the market commanded for properties of that same type. Now, over the last several years, that investment has been paying me quarterly cash flow. So I've been getting checks over the last 5 years, about every 3 months, and the total amount I've collected so far is about $20,000. Then this week, I received an email update from the sponsor, and it said something like this, quote, "The sponsor is targeting a refinance in November of this year that is estimated to return approximately 50% of investors' original capital." For me, that's about $50,000. Remember, I invested $100,000 in this deal, so I'm getting another $50,000 back on the refinance. But here's the crazy part. I'm not selling my interest in this investment. I still own my small percentage of this property. I'll still receive my percentage of future cash flow. I'll still receive my percentage of future appreciation in value of this building. So today, I want to explain how this works, because this is one of the biggest mindset shifts that changes the way I think about building wealth. Now, before we go any further, I want to make one thing really clear. I didn't make the decision to refinance this deal. The sponsor did. That's their job. My job was to evaluate this opportunity, do the due diligence before I invested my money. After that, we give the ball to the sponsor and let them run with it. When I look at a syndication style investment such as this, I'm asking questions like, do I trust this sponsor? Have they done this before? What's their track record? Do I believe in the underwriting for this asset? Does the business plan that they propose make sense? Are our interests aligned? Meaning the interest between the sponsor and the investor or the limited partner. If the answers are yes, then there's a strong chance that I invest alongside them. And from there, I let them execute. That's exactly what passive investing in real estate is supposed to look like. When this deal was presented back in 2021, the idea wasn't, hey, just buy an apartment building and hope it goes up in value. No, the sponsor had a business plan. Like I said, it was underperforming. So they buy the property, they renovate the units, make them move-in ready. This allows you to charge higher rents, market rents, drives up the income. And then on the other side, you reduce expenses, improve operations, increase efficiencies, etc. By doing that, you're increasing the income, you're reducing the expenses, and you are increasing the net income. And as a multiple of cap rate, you're increasing the value of this property. Then, once enough value has been created by doing all this work and driving up rents and driving up, now once there's enough value, now you decide, hey, what should we do next? Should we sell the property and realize our gains? Or the other option is, or should we refinance this deal? Now, fast forward almost 5 years. The sponsor believes refinancing is the better decision for investors. Now, this wasn't an accident. This was the plan. So let's think about where I am today. I invested $100,000 in this property, right? And I've received about $20,000 in cash flow. And now if this refinance closes as planned in November, I'll receive another $50,000 back. So $100,000 in, I've already got $70,000. I'll have $70,000 back. So really, I only have about $30,000 of my original cash in the deal. But here's the part that most people don't understand. I'm not cashing out on this deal. I'm not selling. I'm still an owner of this property. I still own a small percentage of this property, which means I'm still entitled to my percentage of future cash flow. I'm still entitled to participate if the property continues to appreciate in value. And generally speaking, because this is a refinance and not a sale, those proceeds are typically not considered a taxable sale. Now, my disclaimer, always check with your CPA because every situation is different. But that's one of the reasons refinancing can be such a powerful wealth building strategy, right? Refinances, if you can do it, you're potentially moving capital out of the deal in a non-taxable way, which is what we love. But honestly, the tax treatment isn't even my favorite part. The part I love is what happens next. Now, I potentially have $50,000 that I can invest somewhere else. Think about that. The first investment is still working and doing its thing. It's still producing cash flow. I'm getting cash from refinance. But now the same original capital that came back to me as refinance has started working in a second investment. That's when things start getting really interesting. One investment becomes two. Two eventually becomes three. Three becomes four. And that's how a passive income snowball starts. I think too many people focus only on return percentages. I focus on something a little different. How many times can I put the same dollar to work? Dollar in here, get it back on a refinance. Dollar in here, get more money back on refinance. Dollar in there. That's one of the biggest lessons real estate has taught me. When I first graduated from dental school, I thought wealth meant earning more. More patients, more procedures, more days in the office. But eventually I realized something. My practice creates the capital, but my investments are what creates the options. The practice earns money, the investments create the cash flow. The investments recycle the capital. The investments buy back my time. And that's the game I'm trying to play with maximum efficiency. Not because I want the biggest net worth, but because I want the biggest freedom. The freedom to spend more time with my family. Freedom to travel. Freedom to say no to things I don't want to do. Freedom to practice dentistry because I choose to, not because I have to. Now, let me finish with something important. This refinance hasn't happened yet. It's the sponsor's current plan, but there's no guarantee it closes. Not every syndication performs this way. Every investment carries risk. Now, this isn't a promise or guarantee because those words do not exist in investing. It's simply one real example from my own portfolio that illustrates how a well-executed value-add business plan can create multiple ways for investors to benefit over time. So when people ask me why I believe so strongly in passive investing, this is one of the reasons. I get to partner with experienced operators. I don't have to manage apartments. I don't have to take tenant calls. I simply focus on finding great sponsors, doing great deals, and investing alongside them. and letting them execute as professionals. And over time, if you continue making good decisions, something really powerful begins to happen. Your investments don't just generate returns. They begin creating the capital for your next investments. I've said it many, many times. Dentistry creates the capital. Investing in the right things creates the freedom. Now, if you found this video helpful, leave me a comment below. I'd love to hear your thoughts. I'd love to get feedback from my followers. Have you ever invested in a real estate syndication before? Or is this a strategy you're just starting to learn about? Let me know in the comments. And if there are any other passive investing topics you'd like me to break down from an endodontist perspective, let me know. And if you're interested in working directly with me and my network of investment professionals, consider joining our Walk of Wealth Mastermind group. The link is in the description below where you can find out more information. And as always, click on the next video to continue your journey to financial freedom. I'm Dr. Johnny Walker. Thanks for tuning in. Hope you have a great week, and I'll see you next time.